Good morning. Today is Monday, November the 13th. The time right now is 9:16 in the morning. We can see that the US equity market has been on the rampage for 2 weeks consecutively after hitting a low at 32,331.08 in the Dow Jones. And this is referring to the Dow Jones Cash Index. We can see that the high traded last Friday was at 34,310.36. So we can see that the Dow Jones has basically rose almost 2,000 points in just 2 weeks. So this is pretty robust, although last week's rally has been a little bit more tempered compared to the week before. And that's largely after the FOMC meeting, in which the Fed chairman came across as being less hawkish. However, last week during a IMF panel, this Fed chairman actually reiterated what he has always been saying about keeping his eyes on data to see if there's any sign of resurging inflation. This week is going to be crucial because this week we're going to have, starting tomorrow, the CPI numbers, the consumer price index, followed by the producer price index on Wednesday, and then to be wrapped up this week at the retail sales numbers. So we can see all these numbers will be very inflationary sensitive, and we'll be looking for signs as to what the Federal Reserve will do going forward towards the end of this year. So I think this today, the market is going to be pretty quiet because we don't have any major economic data scheduled for today. So I think the market will be coming under a bit of profit taking, in my opinion. In the Dow Jones, that means the price, the equity market may actually ease off. Now, to give you an idea, let me refer you to the futures contract down. This is the micro E-mini Dow Jones futures contract traded at CME. So I think if there's going to be any pullback from the high that we saw last Friday, the high traded in the futures contract is 34,373. There's a very good chance market may pull back to 33,894 to 33,974. And if you can find support here, well and good, because this is also the 23.6 retracement levels. And I think that will be a good levels to actually position buy, because I think the market has not done yet, okay, with their uprise in equity markets. In the future, in the S&P 500, we again saw the same similar move here. Here we have a break of character here because the market took quite a swing high here, which was at 4,393.57 with a high last Friday at 4,418.03. Again, this is a very massive move in the S&P 500, largely led by tech stocks. So if there's going to be any pullback, I think basis the futures contract, the micro E-mini S&P 500 will give us a better idea as to where these levels will be. Should the market pull back from the last Friday high of 4,435.5, the first layer of support is likely to be emerging around the 4,354 and a quarter to 4,375 and three quarter. So this will be one layer, and this is stacked just above another layer of potential demand, and that level is 4,325 and three quarter to 4,340 even. So we can, both these levels are buying areas. If the market do pull back, both areas are ideal for picking up long position for another run up beyond the 4,435.5 that we saw last Friday. In the Nasdaq, now Nasdaq was actually leading the charge this time. We can see the Nasdaq actually rose more than 2% on Friday, and to take the market up to a high of 15,535.2. Now this is challenging the high here that we saw on September the 1st at 15,618.85. So this market is currently very bullish. If there's going to be any profit taking, it's going to be very, very light. Now let me refer you to the micro E-mini Nasdaq 100 futures. So any kind of pullback should likely find support at the 23.6% retracement levels from the bottom of 14,136.5 to 15,616.25. That level will be 15,138 even to 15,257.5. So this will be a very strong levels, in my opinion, for the market to stabilize and maybe to accumulate positions to propel it higher into beyond 15,616 and a quarter that we saw last Friday. And over in Asia, we can see that the Nikkei actually opened very strongly at 33,000 even, and has been falling since. Again, this is part of the profit-taking narrative that I've been talking about. The first layer will be at 32,280, and then followed by the 32,000 even. So we can say there's a potential 1,000 point drop here. So this is seen to be part of a profit-taking. We can see that the market has already taken out the previous swing higher, so there is a change of character here. However, having said that, we can say that the market has actually done a three-wave equality rally here. So this market is technically speaking also vulnerable to the downside. Now, of course, the bullishness on Wall Street may actually carry into Asia itself. So we will have to watch. At the minimum, I think we can gain gun for 32,000 even. Over in the Hang Seng has this morning has not traded yet. At least it has not updated on my chart. We can see that the price has actually come off from the Hang Seng futures from 18,000 levels down to as low as 17,175 on Friday. And we can see that if the market is going to rebound, I think it's going to be quite limited. Upside potential is only limited to 17,500 to 17,600 levels before the market possibly may unravel to the downside, especially if there's profit taking in on Wall Street within the next 24 hours. So we can see that Asian markets behaves a little bit differently from Wall Street itself. On the dollar, because what the Fed chairman said last week has actually bolstered the strength in the dollar. Now the dollar index actually peaked at just under 107 going into the FOMC meeting on November the 1st, but since then it has fallen to 104.69 on the back that he appears to be less hawkish and the market sold off in the dollar. But last week, after what he said at the IMF panel, the dollar rebound back to above just under 106 and is currently coming under very light profit taking. I suspect this profit taking will carry on today because, like I said, there is very little in the economic calendar to actually excite the market. So the market may actually drift lower. If the dollar index drifts into 105.24 to 105.46, that could be a buying opportunity because I think there's a good chance the dollar index may actually retest the 107 levels, perhaps even breaking it. So that being the case, I would think that I'm a little bit bearish on the euro dollars or the principal currency in particular. So right now, I think the market may actually attempt to rally. So currently, it has already traded 50% of the fall from 107.26 to the low that we saw on Friday at 106.56. So right now the market is at a 50% retracement levels and that make it vulnerable. Any more upside will be contained to 107 to 107.26 before the market pulls back down to 106.10 to 106.34 in the euro versus the dollar. Now in the sterling, I do expect the market to actually drift higher. There is potential area for the market to do a 50% retracement from a high of 124.28 to the low that we saw last Friday at 121.87. The 50% mark is at 123.36, and that also coincides with this bracket of prices at 126.26 to 126.47. So I do suspect anywhere between these two layers, we're going to see some kind of selling re-emerge from these two levels. The other levels, of course, is 122.90 to 123.09. Now over in the Aussie is currently testing what used to be a resistance, now turn support. Now the market has actually overshot itself to a high of 0.6523 and dropped back to 0.6339 on Friday, and very little downside is foreseen. If the market continues to drift lower, I suspect anywhere between 0.6318 to 0.6341, we're going to see buyers coming back in as it retests the now resistance and support levels. So there's a very good chance market may actually rebound from here, heading towards 0.6409 to 0.6428. This will at least be the short to medium term outlook, a rebound back into this area of 0.64. Over in dollar Canadian, I think the dollar Canadian has possibly, ever since it took out the October high with a high just under 139, the market has been falling very sharply again on the back of the FOMC comment by the Fed chairman, where he came across as being less hawkish. So dollar Canadian actually dropped from just under 139 to 136.29 and has rebounded last week again on the back of the Fed chairman's comment to 138.55 levels. But I think the momentum is losing right now. We can see that it is a reversal pattern here on the 4 hours time frame as it hit a pocket of resistance at 138.24 and 138.52. So I think this is laying the condition for further losses, perhaps even to go down to below the 136.29 to as low as 135.69 to 136.24 levels, which we last saw the area of demand where actually propelled the dollar Canadian to a high of just under 139. So downside is potentially going to be in play for the dollar versus Canadian. Now, the dollar yen is a bit of an enigma because the dollar yen is rising, and the market is definitely testing the resolve to see if there's going to be any intervention by the Bank of Japan. So currently, I do not have a view, but technically speaking, from a risk-reward ratio level, this area above 105, 151.62, where it's currently trading, is actually a very low risk, high reward potential trade setup here to go counter trend, meaning to say to sell. Because if I'm wrong, I'm just going to exit above 152, and if I'm right, all the way to the bottom, at least up to 148 is going to be my potential. So on a risk reward perspective, this dollar yen does looks like an area of selling opportunity. So you can actually watch here, okay? But currently there is no sign that the sellers are in place yet. Okay, we will have to see what happened near the last October high of just under 152. Okay, and let's see what else. And we can go down to the gold market itself. Now, gold market has been drifting lower from a high of $2,009.56, and it has continued to drift lower to a low of $1,933 this morning on Friday. Sorry, and there is a potential the market may actually hold here for a while. I do suspect there's going to be a rebound to retest the $1,965.70 in the spot gold market, because what does it does look like is a potentially five-way structure. We have done a 1, 2, 3. So now we could be seeing a small retracement back to retest the $1,965.70 before the market come back down again, potentially to go into the $1,868.84 to $1,885.16. So there is going to be still some more downside potential that can still happen, but over the long term, I'm still going to be a buyer of gold. Okay, and over in silver, same thing structure. The market has been trading gradually lower. This morning we have a marginal low compared to last Friday. We can see now the market here. This morning, the low traded is at $22.12. Now, this is within the ABC move, okay, which is AB equal to CD. We have seen the price doing a three-way pullback into the equality range between $22.04 to $22.34. So this $22.12 is within this bracket itself. But I think the market may actually edge a little bit lower, perhaps to test the $21.74 to $21.92, because it was from here that the market propelled to a $23.69 high. So do watch out for buying interest to re-emerge from $21.74 to $21.92 in the silver market. Now, over in Bitcoin, we can see Bitcoin had staged a massive rally to test the 38,000 handle, feeling which the market has gone into a consolidation. Now, based on pattern, we can see that there is a very good chance that it's going to be very light trading going forward, and there is even a possibility that the market may pull back to do an ABC move. However, I think the market is still very, very strong. So if we do get an ABC move, for the time being, assuming the highs at $37,553.60, then the pullback equality level will be somewhere between $35,100 to $35,600 thereabout. But the ideal place will actually, for me to happen to go in to buy, it will be at $34,100 to $34,750 levels. That will be a much more comfortable level for me to actually consider taking a long position for a retest of the 38,000 handle. So do watch out for this kind of moves going into the early part of this week. This is all I have for you. In the meantime, you take care, and I come back to you tomorrow with another update. Bye-bye.